Hello and welcome to today's Absa Insight Series. I am Fifi Peters. The focus today is on Africa's power, utility and infrastructure sectors. Every form of economic activity requires electricity, yet power remains a critical shortage on the continent. While the sector consistently attracts large portions of new capital, Africa has only an electrification rate of 30%. This means that there is substantial potential for growth. To unpack this and other growth areas on the continent, I am joined by Vallabhjee. He is the head of power, utilities and infrastructure at Absa Group. Bhavtik, thanks so much for your time. There's quite a lot happening in this space right now as the world economy, particularly Africa, tries to build back better from the COVID-19 pandemic. But just give us a sense of the latest developments as they pertain to power, utilities and infrastructure on the continent.
Thanks very much, Fifi, for having me. I think you've hit it on the nail. Look, at the end of the day, energy, or power more specifically, is the backbone to any economy. And the reality is, long before the impact of COVID, we already had a significant shortage of power available on the continent, right? So you've said it quite correctly. More than 600 million people don't have access to cheap, reliable power, and that is not going to change overnight. So I think really what we are seeing is several governments are trying to kickstart their economies again post-COVID through infrastructure build-outs. And without any hesitation, I certainly think that power would be at the forefront of that, as we are seeing in South Africa with the whole rollout of the emergency power program as an example.
Certainly, and just speaking as or to the continent as a whole, I mean, we continue to run massive deficit in the infrastructure space that runs into the billions of dollars each year. And as you rightly did say, not a lot of people have access to the most basic form of reliable electricity here. Just again, a question on the pandemic, on whether you see the gap that we currently run, that infrastructure gap, how has it been impacted by the pandemic? Do you see opportunities for it currently to be narrowed, or potential challenges for it to be widened even further?
So what we have seen is clearly, as a result of the impact of COVID, is that clearly governments fiscal situation across the continent has deteriorated, right? So if you look at those economies that are very dependent on oil and gas, as an example, Nigeria, Angola, certainly they've had a bad knock with where the crude price, or the gas price is. If you look at other economies that are commodities driven, like in Southern Africa, the likes of Zambia, South Africa, and elsewhere, certainly we've had our own challenges. So I think certainly what you found as a result of COVID is that there has been a reprioritization of priorities by governments, right? So healthcare has obviously been, taking a forefront in many instances. But I think that having been said, as I've alluded to just now, infrastructure will continue to be used by governments to actually kickstart their economies, to create jobs for industrialization, etc. And energy is very much the backbone of any growing economy. Without energy, you can't get the wheels of industry going.
And as you rightly said, a lot of governments have put plans on the table to try, get the wheels of energy and infrastructure turning a lot stronger. And I'd like a sense from you on the level of investor appetite that you are seeing to partake in such projects, perhaps based on what some of your existing clients are saying, or even new clients that are wanting to come on board are saying about partaking in the infrastructure and power space right now on the continent.
So look, I think, I've always said this, there's never been a shortage of capital, whether you're talking about debt or you're talking about equity. There's a lot of equity, there's a lot of debt that's readily available to be deployed. The issue we really have, and that's really been holding back projects, is the precursor to actually getting projects closed. And that is really the enabling environment, the robustness of the program, credit quality of the off-takers that are signatory to the power purchase agreements. Those are the sort of precursors that need to be in place. As you know, and this is not unique to South Africa with Eskom. In fact, Eskom in many situations is probably better off than many other utilities across the continent on power. But the reality is most utilities are not the most financially robust, they're not the most credit worthy. So when you are looking at a long-term power purchase agreement and long-term debt funding, you clearly need some sort of credit underpin, some sort of backstop for termination payments or the regular payments under the PPA. And this is where, if you have a well-structured program and you've got government support through either guarantees or a letter of comfort or some other structure that mitigates for buyer default, then it actually makes it a bit more appealing, both from a debt perspective and from an equity investor perspective.
Mm. And how would you rate some of those precursors now that have, historically impeded many projects from reaching the close? And I ask this as many governments are actively working to try and attract more investments in their country by creating an enabling environment. So in your view, I mean, have the work and the efforts that governments have put in place gone far enough, or does a lot more need to be done to get these projects to close?
Look, I think it really depends on a case-by-case basis. Certainly, some governments have been ahead of the curve. They certainly have got what they needed to have in place to solicit investment from the private sector, and other governments, are somewhat lacking, right? So we've seen a couple of programs across the continent, right? So in South Africa, you've had, a very successful REAP program for renewable energy. About 112 odd renewable energy IPPs have been rolled out in almost 10 years. Other countries, has not been as successful in terms of a quick rollout of projects. But that having been said, you've had the Scaling Solar program that has been rolled out by the IFC, in certain key countries, and then you've had the Get Fit program in certain other countries, such as Uganda, and that was being looked at in Zambia, that was driven by the European equivalent of the IFC. So these have certainly helped, fast track projects and get them underway. But I think what you found different in Africa is there are a few markets where you've had scale, and I think South Africa certainly stands out. I would say Morocco is another one, and certainly Egypt has been. But I think generally the impact of COVID has not been easy for governments. It has resulted in strained finances, and it has resulted in certain delays for new projects that have not really started, certainly because of the reprioritization of objectives by governments across the region.
I'm just interested in your view on a lot of African governments driving diversified energy mixes in their plans to try and get more people electrified on the continent. How do you see this? I mean, what's the level of interest you are also seeing from perhaps investors in the space?
So absolutely, I think if you look at where renewable energy is as a technology form today, whether you're talking about wind or solar PV, the prices have actually fallen significantly over the last 5 to 7 years, to the point where we actually say that power from renewable energy sources is actually at grid parity in many respects. And grid parity basically means the cost of new technologies such as renewables is equivalent to conventional power, power plants, right? So such as coal, as an example. So I think certainly what you will find, in certain countries like South Africa, where we've had a very high dependency on coal-fired power generation with Eskom's power fleet, there's very clearly a move to try and reduce our greenhouse gas emissions, and we have got renewable energy as a very big part of our generation mix going forward. And we're also able to generate power through renewables at a very affordable rate. If you look at where the average tariff is from Eskom, through conventional coal-fired power plants. And I think that is certainly the trend the world over, right? So generally, renewable energy is coming in quite cheap due to the falling cost of technologies. And I think many governments are latching onto that. Africa is blessed with an abundance of natural resources, whether you're talking about solar, whether you're talking about wind, whether you're talking about biomass or hydro potential. We have all of that, right? So I think it's really free energy in many respects, right? Free fuel, and the ability to actually tap into that to generate power competitively really does exist for us on the continent, across the region. So I think many governments are certainly trying to capitalize on that. They've looked at what has happened very successfully in South Africa as an example. Certainly our neighbors are, where they feel that they can certainly benefit by rolling out more renewable energy projects and certainly score on lower tariffs compared to coal-fired generation, which is dirty in a sense, or even gas, which generally, when gas prices are higher, is a lot more expensive than where renewable energy tariffs are at the moment.
I'd like your take on, the latest happenings here regarding the energy storage space, the price of such technologies, and whether our governments, as you did mention, the constrained balance sheets are able to afford such technologies right now.
Yeah, look, the reality is storage technologies are still very much, it's not brand new, but still very much at an early stage, right? So we've seen companies such as Tesla, as an example, spend a lot of money on R&D on battery storage, lithium-ion batteries, etc., primarily focusing on sort of the electric vehicles market. But using that, it's actually devolved now on lithium-ion battery storage, as an example, being coupled with solar PV plants, right? But I have to confess that cost is not cheap. So I think whilst battery storage is not mainstream right now, 5-6 year view from now, it could be a very different scenario. If you look at technologies such as CSP, concentrated solar technologies, generally what we've had in South Africa, those tariffs have been high. It has anything from 10 to 12 hour energy storage. But if you look at the technology on solar photovoltaic with lithium-ion battery storage, I think that could certainly be a game changer going forward for competitiveness of tariffs. So I think what we are seeing in the emergency power program in South Africa right now is battery storage being used by several international bidders under the program. And so that's going to really catapult the way the industry is actually been evolving in the region. And I think South Africa will really be leading the way in some respects for what is to follow more widely across the continent.
Perhaps maybe you can paint a picture of what is to follow more widely across the continent regarding energy storage. Perhaps your 5 to 10 year outlook of what we could see happening in this space.
Well, one thing for sure, if you are going to get the electrification rate up in the continent and allow more people to have access to safe, cheap, reliable power, it can't be done with the old model. So if you take South Africa as an example, our Eskom power plants were designed and built where the coal fields of the country are. And that is really where in Mpumalanga and in Limpopo. Now from there, where those coal plants are, to Cape Town, is 2,000 kilometers. So power plants used to be built there and power wheeled all across the continent, all across the region, down to Cape Town. What you are finding now is that renewable energy actually allows for power plants being built at the load centers, specifically where power is so required, right? So renewable energy now doesn't mean that you've got to have one big centralized plant built in a particular place and wheel long distances. It's built at load centers where plants are required. As a result of that, you're finding a lot more captive power plants being considered, right? So as an example, some mines that are in remote locations inland in parts of Africa, that relied very heavily on diesel generation, as an example, with falling costs of technology, are looking at captive plants using possibly battery storage with solar or hybrid plants, as we call it. So we're certainly going to see more captive plants. I think the other thing, storage will be augmenting energy storage, right? So I think that you'll certainly see more of. I think moving away from the centralized energy model and getting away from large transmission losses, you will find more mini grids and microgrids, right? So if you look at sort of rural electrification, many of our citizens in Africa, live in sort of remote villages, remote areas, and sometimes, it's actually difficult for the state utility to actually access these locations. But I think again, with distributed power, you will find that these power plants being set up through sort of mini grids to service a particular small community in that region. So these are sort of themes that you will see coming forward. I think the other point, you are certainly going to find that coal-fired generation is a thing of the past. Many OECD countries don't look at coal-fired new generation any longer, becoming very difficult to finance that by OECD banks. I think South African banks have certainly been following suit. It's going to become really difficult for commercial banks, ECAs, DFIs to finance anything coal-related. Coal would be a thing of the past. Gas generation could still fulfill a role, right? If you look at where gas prices are now compared to, say, 10 to 15 years ago, it's a fraction of that cost. So 15 years ago, as an example, the gas price per million BTU was in excess of $12 to $15 per million BTU. It still means that gas can be used intelligently, effectively, to as what we call mid-merit plant or peaking power, to supplement variable renewable energy that we get from solar generation or wind power. So those are what I really think will take root going forward in the energy landscape here in region and in Africa.
And given those trends and that outlook that you have painted, what do you expect the cost perhaps of financing those projects, the level of risks for financiers to partake in those projects to be? Do you see it coming down over time, particularly as it does pertain to some coal projects that may still need or may still require seeing through to the finish line?
So look, funding cost is really a function of risk in many respects, right? So if you take, South Africa, when we launched our first projects under, bid window 1 in renewable energy, the cost at that stage compared to where the costs are from a funding perspective now have actually, in the last round, in round 4, have actually come down significantly. And what's happened in that period of time is the market has matured, this asset class has actually matured. People have become a lot more savvy constructing wind-fired power plants or solar power plants in South Africa. And I think that's going to be the trend elsewhere in the region as well. So cost or financing cost is a function of a few things, right? The quality of the builder or the developer, the sponsor behind the project, the robustness of the program in the particular country, the quality of the off-taker, the credit risk of the project. So all of these things need to be looked at in tandem. And ultimately that drives cost. So it does depend. I mean, I think, but generally, I think technologies are a lot more mature now. And, I think it's very difficult, to price them expensively when, there's been such an abundance of these projects and these technologies rolled out across the region.
And staying with the topic of energy storage and some of the technologies and the solutions that have come to market, do you see an opportunity for African governments to perhaps benefit from the beneficiation process of bringing some of these solutions to market, given that a lot of the inputs of these technologies, your lithiums and your cobalts and the vanadiums are mined here in Africa? So do you see such opportunities, and perhaps how should governments be exploiting that a little bit better?
No, absolutely. Look, I mean, I think it's certainly something that governments need to actually look at more holistically. So power is an aspect, but the reality is, we have an abundance of these resources. So like you've spoken about, cobalt, DRC is 65% of cobalt globally is actually produced in one country, the DRC. But how much of that is really being beneficiated in these countries? Not a lot, right? So it's exported elsewhere. Manufacturing industry actually occurs elsewhere, and we're actually losing out. Same story with lithium. Same story with vanadium. There are a couple of good initiatives that we are seeing in Africa, right? So you take Bushveld Energy as an example. It's actually sprung up from Bushveld Minerals, a South African company that has been mining vanadium, right? But I think really government needs to clamor in on this, create the right incentives to lure manufacturing and industry, and it will happen. There's no reason why it can't. We've done that very successfully in South Africa with the Motor Industries Development Plan in years bygone, where we've done this for the auto sector. So I think there's no reason why we can't create spin-off industries using our minerals, to beneficiate and create industry in our countries, to create jobs for our people, right? So it's a question of, firing on all cylinders, creating the right incentives to tax breaks, decentralization grants, etc., etc. So it becomes more lucrative for sponsors to actually set that up. Remember, we are actually competing on the global stage for capital. We're competing with the Far East, you're competing with elsewhere, and so if we don't have the right incentives or a robust political environment, clear policy, you're not going to lure in international capital. Capital is mobile. So these are things I certainly believe government needs to fire with all cylinders, and departments need to work together with the view ultimately of the economy and the country benefiting. But we can do it. We've done it in the past.
Because quite often a challenge that is thrown out there is the fact that we are lacking in the manufacturing capacity to be able to conduct such processes. Also the skills. We don't have the skills. Some naysayers say as to why we don't have a high level of beneficiation happening here on the continent. And then there's also, I mean, you did touch on policy, but there's also, there has been historically some resistance to how governments have tried to empower communities through their empowerment legislations and so forth, with multinationals often saying that it is unattractive to do more business here. I'm just interested in how then you think that those impediments could be relooked and perhaps overcome in future.
No, look, I agree with you. I think the reality, I've mentioned this, we've got to fire on all cylinders, right? So you can't clap with one hand. At the end of the day, we can't kid ourselves as to what our necessary skills and expertise are. There's no reason why our locals can't benefit from the right training programs, from the expertise of internationals, right? If you offer the right grants, tax write-offs, etc., what we had with the smelters, aluminium in years bygone, where we had cheap power. Okay, we don't have cheap power anymore like we did. But the reality is, there's various other incentives you can offer, taking advantage of what you have, working with the internationals who've got the expertise, who've got the manpower, who've got the right skills to come in, set up factory here, work with our people, train, etc., empower. But I think, we've got to look at this holistically, right? So creating the wrong environment or having a disincentive is not going to work for us. We've really got to fire on a multitude of cylinders.
Just to comment on the current prices of oil and gas and the impact that the current prices and perhaps the trends may have on the battery storage sector, and perhaps more specifically the competitiveness of the sector.
So look, the reality is, if you speak to some internationals that are setting up gas-fired plants, I mean, they will tell you that they can, set up a gas plant sub $8 on a tariff, 8 US cents per kilowatt hour, right? So I think the reality is, gas right now is cheap, right? So your gas price is cheap, but that may not be the situation 5 years from now. So certainly, I think the impact of COVID has resulted in a lower demand for crude oil, for gas, etc. We've had a number of LNG plants that have come on stream, liquefaction facilities. So you've got an abundance of gas right now that's resulted in prices being where they are. But as gas ticks up, gas will certainly become more expensive. Battery storage at the moment is still very much at its infancy. It is proven, but it's still very much large-scale plants, battery storage plants, have not been done in abundance the world over. So I think it is still expensive. But what you will find is sort of the cost of battery storage will fall over time, and possibly, depending on what your outlook is on the gas price, gas may well increase over the next couple of years. So you've got to look at that in tandem. I think, as I said, gas can play a very different role, right? So I've spoken about sort of mid-merit plants, I've spoken about peaking plants. If we are moving away to, from coal, the energy transition basically talks about clean and green energy. I think gas is not carbon-free, but it is certainly less pollutant than coal. And I think gas coupled with renewable energy would certainly be the future. So I think there's a space in our energy mix for variable renewable energy plants, such as wind, such as solar, using it with hybrid technologies such as battery. And gas certainly has a different role to play. So there's a need for these cross-pollination of technologies to form part of the energy mix, and that's what we've done in our integrated resources plan in South Africa. The government has considered various options, various technologies to coexist.
We are still in the middle of a pandemic, and there is still a lot of concerns about how the dust will finally settle. And we have also been speaking about our infrastructure deficit and in fact the opportunities in this space for many, many years, and yet these opportunities still today have not been exploited to their full potential. So as you do chart a more optimistic picture going forward, perhaps just let us know what your main concerns to realizing that picture, particularly for the continent, could be, and what we should be doing perhaps to avoid those concerns becoming a reality.
Sure. Look, I think my view would really be that governments, should not be the player and referee, right? So I think governments should really be creating that enabling environment that I've spoken about, and let the private sector be tapped for resources, for expertise, for efficiency to roll out infrastructure. So, government should be playing the role of creating this environment, being able to solicit foreign investment, and I think the private sector should be tapped into, to bring in the capital, bring in the expertise. So this is what speaks to PPPs, right? Public-private partnerships. I think if we get that model right, then I think, like you found in other destinations, like you found in Europe, right? The UK, as an example, have used PPPs very successfully across infrastructure classes, right? So you've had them for schools, you've had them for roads, you've had them for the DLR, the train service, etc., etc. So I think the water. So you can certainly tap the private sector. There's no shortage of capital, there's no shortage of expertise to be tapped into. They will only come if you've got clear policy, if their investment is going to be secure, and you have it as a win-win between government and the private sector.
No, certainly. I mean, it certainly does have to be a win-win that will ultimately trickle down to the people that need it the most, right? The communities. But that is where we leave it for today. Bhavtik, thanks so much for your time, giving us the latest insights on power, utility and infrastructure here on the continent, and where it could be headed if we do things right. That was Bhavtik Vallabhjee, who is the head of power, utilities and infrastructure at Absa Group. And that's where we leave it for today's Absa Insight Series. Hope to see you again next time. Do enjoy the rest of your day.